Hello, everyone. Paul Benedict here with the Benedict Group at Keller Williams Realty Las Vegas. It's Friday, November 12th. I'm here to give you a monthly recap of Las Vegas real estate. Things are still amazing out there. However, they are changing. It's the holidays. Things are getting a little bit slower, a little bit more balanced, which is a good thing. Let's dive in and talk about numbers. The first slide I want to bring up today is inventory. All right, how many houses are listed in Las Vegas? Well, as of this morning, when I pulled the number, 4,057 houses were listed in the greater Las Vegas area. That's a slight dip from this time last month. We were on the right trend. Ever since April, we've been increasing our inventory. More and more homeowners were putting their houses for sale, and that's what we need. We need that in order to have a more balanced market. However, in October to November, we did dip a little bit, and my associates and I believe that's because of seasonality. So when the holidays approach, when we get closer to Thanksgiving and Christmas time, just things slow down just a tad bit. So that's probably the reason for that slight decline. In terms of sales volume, October saw slightly fewer sales than September. Now, that may be a little disconcerting in terms of what we want to see in the market, because we want to see more of a balance between buyer demand and availability. And we want to sell more properties than what we are because there's so much pent-up demand. However, again, there is a slight seasonality to consider here. If we look back to October of last year, there was a slight decline as well. From September of 38.78 to October of 38.46, it's a very slight decline, but that's partially due to seasonality. Bottom line is, when more homeowners put their houses for sale, there will be more options for buyers, less competition, fewer multiple offers and fewer bidding wars, and more houses will sell. Absorption rate, if we take the number of houses that sold last month and divide that into how many are for sale now, we arrive at a 1.1 month absorption rate, and this is indicating a plateau that I've been predicting for a while now. So many people out there are thinking that we're going to crash, that we're in a bubble, and most of my associates and I believe that's not true. We're going to plateau, and this is the first piece of evidence I have for you today that is evidence of a plateau coming. So the absorption rate for the past 3 months has been stable at just over 1 month of inventory. My favorite slide to discuss is the median price of a house in Las Vegas, detached house. Look at this. This is good news. September 410, October 410. Again, evidence of a plateau. We don't want to see 5 to 10% appreciation every month. The crazy appreciation that we've been seeing since COVID is unsustainable. January of 21, 345, February 355, March 365, 377. Those kinds of increases are not sustainable. We want this plateau to occur. That'll create a more balanced market between buyers and sellers. Also, I'm sure you recall, every month for the past year almost, I've been saying, if you're a homeowner and you're considering selling your house, your window of opportunity to take advantage of the craziness out there is closing, and we see that now. That doesn't mean it's still not a seller's market. It is 100% a seller's market still. With only a 1 month of inventory, we're still biased towards sellers. However, the craziness of offering many thousands of dollars above an appraised value and bidding over the asking price and stuff, that's slowly starting to soften and end. There are 5,134 properties under contract but not closed yet. Looking back to our inventory that we talked about earlier, 4,057 houses are actively for sale. Another 5,100 are under contract. So that's more houses under contract pending than there are actually for sale now. I love this slide as well. I started talking about luxury homes a couple months ago, and check this out. Of course, appreciation has a big part to play in this. However, more luxury buyers from international places are coming to Las Vegas to buy luxury houses because they are a deal. Our luxury market is considered to be a deal in comparison to other major metro areas and their luxury markets. So $1 million in Las Vegas will buy a lot more than it'll buy in San Francisco, New York, Chicago, London. So far this year, we've already closed over 1,300 houses that are over $1 million. Last year, 748 total houses closed over $1 million, and the year prior is here. And you see this. Of course, appreciation does have a part to play, but our city's becoming a mecca for international luxury buyers. 30% of sales last month went to cash buyers, and that's still strong. However, the higher prices go, the fewer investors will be active in our market. If we check out condos and townhouses, the median sales price for that product segment is $236,000. That's up 28% from last year. I didn't mention that the median price of $410,000 for a detached house is 20% up from last year. Price per foot for a resale house is $223 a foot. This is kind of interesting as well. Houses sat on the market last month for 10 days. So another bright spot. We're starting to stabilize even more. 10 days on market is the average. I haven't spoken much about rentals in quite a while. So the median price of a rental in Las Vegas is $1,895, and that is sky high as well. Check out what it's done over the past year or so. $1,895 for the past 3 months. In July, the median price of a rental was $1,800, $1,795 in June, $1,700 in May, back to January of $1,600. So rentals are strongly increasing as well. That's all for this month, folks. Thanks for listening and watching. Please ask me any questions you'd like. I'd love to do comps for your house and your neighborhood. I know the market very well. I've been a realtor for over 18 years here in Las Vegas. Let me put my experience to work for you. Paul Benedict with Keller Williams Realty signing off. See you next month.